So today's video is on risk and reward. I'm going to show you guys on the whiteboard kind of visually how this works, how to utilize it and what it is, and we'll get right into it. So risk and reward. Basically what it is how much you're willing to lose on any given trade versus how much you're trying to make on any given trade, right? So what are you willing to lose if you're wrong? If, say you're trying to enter right here and you're wrong, how much are you willing to lose? Personally, I use a ratio, right? This is a 1-to-3 risk to reward ratio. And what that means is I'm trying to make 3 times more than I'm willing to lose, which is 1 time, right? And in this case, it's a 10% loss versus a 30% target. Okay, now I personally find this works pretty good for altcoins, not so much Bitcoin. It's not as volatile. Volatile meaning how much percentage change it goes up or down in 24 hours, right? So a lot of altcoins can go up like 100% in 24 hours. You probably won't ever see that in Bitcoin now that there's enough money into it. We might, but probably not, right? So since trading is based on probabilities and statistics, there's a pretty good probability of being able to make 30% versus a 10% loss in 24 hours in these conditions with the right entry. So personally, when I look for entries, I look for the second swing on the downside. Okay. These are 1-minute I usually trade this plan, swing trading, with 1-minute candlesticks. So this is 24 hours time frame usually when I use this. But it's applicable to any scale, right? In any time frame. You might have to adjust your percentage, but as long as the ratio is the same, you might do, a 60-to-20, which is still a 1-to-3 ratio. As long as that ratio is the same, you're fine. So basically, here's the box. This holds 10%, right? So this is 10% that I'm willing to lose. In this case, I would have came pretty close to my stop loss if I would have entered right here, like I've drawn here. So it would have gotten pretty close to my risk, right? Personally, I just set an alert, like right here, so when prices get close, I can watch it and see if I need to close out. Now, this is 3 times bigger, right? It's 3, so 3 spaces above, this is where I'm looking to exit. This is where I would have exited on this trade with a 30% gain from my entry. This helps with a lot of things. It helps you understand your entries better because you can kind of visualize how much you need to move inside of the market to hit your target in either direction. Okay, now we'll go over to my computer screen and I'll show you how to use it inside of real markets. So here's some charts. This is on Coinigy.com, but you can also do this on TradingView.com for free. Coinigy is free trial for 30 days. I highly recommend it. I have a referral link in the description if you want to give it a shot. But I really recommend Coinigy for trading because you can set your buys. You can drag your buy order to where you're looking to enter, or you can set your sell order where you're looking to sell. It's just a very good way to set things up, right? I really like how it's set up. So I like Coinigy, but you can do this on TradingView too. What you want to do is you want to go to get this risk and reward here, where it gives you the percentage, the ratio, and everything. You want to go over to the left side here and click long position, and then just click on where your entry is, right? And then you're just dragging up your target. Oops, there we go. And then you're just dragging up. Come on down. There we go. And then you're just dragging up your target and your stop, right? So that's how much you're willing to risk, 10%, and then you're shooting for that 30%. Now this is Bitcoin prices, so I don't use a 1-to-3 on Bitcoin because it doesn't have enough volatility. That's the nice thing about cryptocurrencies is right now they're, long-term low volume, long-term right now they're pretty low volume. Short-term they're breaking volume records, right? But long-term we're pretty low volume, and so there's a lot of volatility, which makes for better risk and reward ratios, right? Because If you enter at that low, it's more likely you can swing up to that high in about 24 hours, which is what I've been doing, is swing trading. I try to enter in these lows, and then I just try to catch a 30% swing. I'll go ahead and show you a different coin here, one that's actually an altcoin, so that we can kind of see, so that you can kind of see what this is looking like in practice of an actual altcoin. I'll show you why it works. This is also useful for back testing. So let's just go ahead and use Stellar for example purposes. But basically, if you look right here, you can find all these places where this risk and reward ratio holds true. So if you enter right here, right, you could have swung up to that 30% right there and exited. If you entered right here, again, you could have caught that 30%. If you entered right here, you could have caught that 30%. Right here, could have got that 30%. So basically, they have a very, well, I guess that's 25%, but let's drag this up. There. Basically, you know, they have a very high chance, if when they hit a low, of bouncing back up at least 30%. So if you can look to enter at these lows, right, and the method I use is I look for that first swing down, first swing on the downside, and then I look to enter on that second swing here. And if I enter on that second swing, there's a high probability of it going back up to that 30%. So when I'm back testing stuff, I just, you know, use this, since 3 to 1 is my ratio, like I discussed, I just drop this places and see if it back tests. You want to make sure that your bottom ratio is correct so that you see that you didn't get stopped out on that trade. But if you would have entered here, you know, 30% swing trading in just a very short fraction of time, these are 1 minute candlesticks, right? So that's a 30% move in just like, you know, 30 minutes, half an hour or so. So if you can catch those a whole bunch of times, that starts to compound really quickly. And you can make a lot more growth than trying to catch from here to here, right? If you're trying to catch from here to here, you don't know for sure when to get out. You could assume when you're going parabolic, but it looks, you know, from a standpoint of when you're in the coin, when you don't see all this other data, when you're actually right here in the coin, right? Because that's what's important, is what it looks like when you're there. Because perspective and context is very important in crypto trading, especially. That's why when people ask me, you know, is an entry good, I try to ask, you know, I try to inform them that they need to tell me a lot more parameters beforehand, variables involved, like where their entry is, what they're willing to risk, what their target is. All of these things are really important before you ever buy the coin. Because if you make the decision before you buy the coin, you're not thinking straight. You're in the mindset of concerned about the outcome. And when you're concerned about the outcome, you don't think as logically. So you want to make the trade beforehand, have a plan, and then apply it. See if it works and make adjustments where it's needed. But yeah, that's way harder to catch than swing trading it. Bam, catch your 30% right there at a low. Bam, catch your 30. Well, I guess this one you'd still be in this trade, right? So you wouldn't have exited, but you could re-enter. And then let's see, where's another spot? So you would have exited like right here. You could have caught a re-entry, grabbed that 30%, and then you would have exited right here. Could have caught a re-entry, got that 30%, and depending, you may have tried to enter right here, and then you may have gotten stopped out, right? But I guess that one, I guess these are 16%, 26. Okay, yeah. So when you're doing this, you want to make sure your percentages are right every time to make sure you can actually back test that theory, right? You want to have the stop and that 1 to 3 ratio, 30% to 1%. And you can use all kinds of ratios, right? I mean, all kinds of percentages in that ratio. If you're trying to do a bigger one, but you're still shooting for 1 to 3, you could look at a bigger scale here. Because scaling is everything, right? Time frames, like when you're in different time frames, things look different. But it all fractals, all the patterns are in every time frame, right? So It really is only applicable to what time frame you are trading. So if I'm trading 24 hours, I don't look back in a huge history of time. I look for a second to see where the trend is, but I don't, it's irrelevant to that 24 hours that I'm looking to hold it. But as you can see here, if you're looking for a more longer term trade, and maybe you saw this bottom out right here, and you still have that 1-to-3 ratio that you're willing to risk, or maybe you even enter right here, right? But you've got that 1-to-3 ratio. You could let this thing go up, you could let it go up to basically, you could do like the 600%. These ones are way harder to call, right? These day swing trades are easier to call than these big, huge trades like this, but it's, all the math is the same in any scale, so if you can get them, then you know what you're doing either way. So yeah, as you can see, you wouldn't have gotten stopped out from what you're willing to risk, which is 200%, which is a lot, but the ratio is still the same, so if you're using the same pattern for entries and it still back tests fine, then it's okay to use this. But I don't really, this is way harder because there's lots of false bottoms before it actually bottoms, and it's kind of hard to tell for sure. That's why volume is a great indicator, right? Because right here we broke volume records. That was the first sign that this was starting to bottom out. So everything before this was just kind of false bottoming along the way. But yeah, that's kind of how I use risk and reward. I hope that it kind of helps determine, or helps you in your trading. For me, I just set a alert right here, a little bit above. I don't actually use stop loss orders. I just have an imaginary stop at my stop with a text alert. It just sends a text to my phone when it gets close. And I do that on the top and the bottom so that I can hop in and sell. Because I'm only looking to trade them for 24 hours, right? Oh, and speaking of which, if it hits my low target, if it gets to my low target, but it already, and it pulls back up into range, but it didn't actually go below my low, so it didn't tell me to sell, and in the next 24 hours, since it is day swing trading what I do, if the order doesn't actually get filled either direction, right, so if it doesn't hit my target or my stop, then I just hold it, because some people are asking me, when I day trade, do I sell after 24 hours? No, there's no reason to until it hits my target or stop. I just didn't get my timing right? So timing would be the issue if I didn't get it in the 24 hours that I'm shooting for. I try to get it right when it does that swing, right when it bottoms out. And usually that gives me pretty good gratification, pretty quick, quick gratification. And that's pretty important in trading, is to get that quick feedback from your trade to kind of confirm that you're doing the right thing. But you want, if you have a plan, then that feedback isn't quite as important. Well, it is still really important, obviously, but so that's how I use risk and reward in my crypto trading. I hope this helped answer some of your questions, and we'll switch back to the other camera here. Thank you for watching my video. I hope that you learned something. If you personally use risk to reward, let me know in the comments below. If you have any questions or suggestions, you can also let me know in the comments or my email address. Follow me on social media. Like this video if you learned something, and I will catch you guys in the next one. Stay profitable.